Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and this is where we discuss everything about the stock markets, the way the trade has panned out today, where were the gains and losses seen, and how did the market fall really impact your investments today. Yes, the markets, after a sharp rebound yesterday, again tumbled in today's trading session following the weak global cues that we were getting right from the word go, and the Sensex and the Nifty both, in fact, slipped about 1% in trade today. Talk about the Sensex, it is given up almost 537 points at close. The Nifty ended just above 17,000 levels as well. Of course, there was a heavy selling pressure across major sectors in today's trading session, barring just about one sector of media. Rest all of the sectors ended in the red. The market sentiments were hurt following a rout in Asian and Wall Street indices over worries of global economic slowdown and news of Russia cutting gas supplies to Eastern Europe, prospects of US rate hikes, COVID in China, and the related curbs right there also added to the investors' woes. In Asia, we saw shares declining in Japan, South Korea, Australia, while Shanghai advanced, but Hong Kong was definitely muted in trade today. Now, in terms of the domestic markets, heavy losses were seen in power, financials, telecom stocks. Heavy selling in index majors like ICICI Bank, Bajaj Twins definitely dampened the mood. After the earnings, Bajaj Finance definitely slipped 5% in trade today. The roller coaster ride in the markets is likely to also continue going forward in the near term, as per most of the experts. Let's look at the closing levels and then we will dive into details. 537 points gone there for the Sensex today, almost a percent of a downtake at 56,819. That's the level at which the Sensex shut sharp. The Nifty also lost 162 odd points to end the day at 17,038. Now, most sectors registered losses, with financials, power, and telecom being the major laggards today. On the 30 stock index, we saw Tata Steel recording healthy gains, while Bajaj Finance, Bajaj Finserv, ICICI Bank Titan were among the biggest losers in today's trading session. On Nifty, it was Hero MotoCorp and Tata Steel that gained the most, but Bajaj Twins, Tata Consumer Products, Shree Cement were among the biggest laggards as well. Now, of course, among other news, the biggest news of the day was definitely the clarity coming in from the LIC management on the upcoming IPO. The LIC IPO will open on May 4th and will close on May 9th. It is a mega IPO. It is likely to be the biggest ever IPO India has ever seen, although the size has been now cut sharply from initial divestment of 5% that was thought about. The government will now be selling 3.5%. It will be almost a 22,000 crore rupee, 21,600 crore rupee issue size as well of this IPO. So be the largest ever. But this, valuations have come down. The prices have been kept at 902 to 949 rupees per share as well. There's a reservation for policy holders. There's a discount for policy holders and for LIC employees as well. For all those details, you can actually log on to Business Today to understand how which way the markets and the participants really headed as far as the LIC IPO is concerned. This is definitely going to be the biggest talking point all of next week as well. Now, as we head into the expiry, of course, most of the experts do believe that the markets will continue to remain highly volatile in tomorrow's trading session as well. But in terms of other stocks that actually were in focus today, Syngene was in focus as Q4 earnings came in at, profit after tax came in at 148 crore rupees. That was down from 161 odd crore rupees on a year on year basis. Consolidated revenue came in at 758 crore rupees. There was a slight uptick on a year on year basis. EBITDA came in at 250 crore rupees. So the operating profit definitely increased. The margins also slightly saw some uptick of 33%, up from 32.6%. Adani Power shares were in focus yet again. It hit an upper circuit for the fifth straight session. The stock has zoomed 97% in this entire month. So very, very sharp move. Again, in the Adani Group stocks, they are in complete focus. Airtel acquires 7% stake in Carnegie Technology. So that's another stock that was in focus as well. Apart from this, in terms of the retail stock participation, there's data now supporting that retail stock participation has zoomed to a 14-year high. Mutual funds Nifty stake is also at a 20-year high. So no secret that retail participation in Indian markets has really shot up over the last couple of years, and more investors seek to get higher returns from stocks amid the low interest rate scenario that we are seeing and the impact on the traditional investment assets like FDs. Now, NSE data on ownership trends and patterns, including that for the quarter ended December, also showed that retail holding has definitely surged to a 14-year high. So that's a big, big positive for all the retail investors who've been giving the support. And on the other hand, you actually have the overseas investors ownership into domestic stocks that has fallen to its lowest level in 9 years. So retail is definitely becoming the king at this point in time. That's a big one that all the investors must keep focus on as well. Apart from this, LIC, like I was talking to you about, is the biggest focus point of today, and LIC will remain the talking point over the next 1 week too. The shares are now expected to list on May 17 after opening for subscription from May 4th to May 9th as well. So that's going to be the big talking point going forward from here. Of course, Rainbow IPO was open today. That was another IPO after its campus activewear day 2, and Rainbow Children's Medicare IPO day 1 as well. So the IPO season has also kick-started with smaller ones first, and then LIC also hitting the street very, very soon. I'll keep you posted with everything that's developing on the D Street and all the buzz that's there. But for that, you need to stay tuned on to Business Today. I'll take your leave right here. But do stay tuned and don't forget to subscribe to our YouTube channel.